Good afternoon, boys and girls, or good morning, America. I'm back after almost 2 weeks of holiday. My live stream for this Friday, June 2nd, we will have non-farm payrolls today, one of the most important news for the market. So let's not waste our time and start right away with the news. We will get in about 10 minutes average hourly earnings and non-farm payrolls. So the expectancy this time is pretty low. You can see the forecast with 180k. The previous number was 253k, so a lot higher. And if we go a little bit into detail, we will see that this number is the same forecast as in the previous months. But in the previous months, we already had a higher than expected number with 253k. So you can see in the previous months, we always had higher numbers than 200. So this would be the first month with a lower number than 200. But yesterday we had the ADP numbers for the job market. So let's go back to yesterday and see the ADP numbers. ADP non-farm employment change. So this is the first indicator for the numbers for today. And there you see the forecast was also low, 170k, and we got a more than 100k higher number than expected, 278k. So probably today we will see the same again, a higher than expected number because the forecast is pretty low. And what does this mean, a higher than expected number? So if we get a higher number in non-farm payrolls, which measures the change in the number of people employed during the previous months, excluding the farming industry, then this means there are more people having an income and being able to spend money. So there's more economic activity. This is not what the Federal Reserve wants to see, because then we will probably get a higher inflation rate, especially if we will see an increase here in average hourly earnings, because then everyone who is employed will get higher earnings. And this is a big problem if this number is too high, this increase. So here you see this is the earnings inflation, if you want so. 4.3% year over year is the earnings growth. And here you see the monthly number, 0.4%. So it's slowing down a little bit, as you can see, but it's still a high number. And yeah, so the Federal Reserve wants to see lower numbers here. I would say this is even more important than the unemployment rate, because here we can see if there is a risk of more inflation. And if we are talking about inflation, let's go back here to our CB FedWatch tool before the news are out. So we had a big shift here during the previous weeks from lower interest rates to unchanged interest rates. And then 2 or 3 days ago, we had 60% probability for a next interest rate hike up to 5.5%. But now we can see it shifted back to no change, and 29% staying here for the 25 basis points rate hike. If we go to the probabilities for the next Federal Reserve meetings, there we see it's not over yet. Maybe we will see another rate hike, but yeah, it's almost staying here at 5.25%. So it can be the high point of the interest rate level, but it can also be that we will see one more rate hike up to 5.5%. And this is what Jerome Powell was talking all the time. He was saying there won't be any lower interest rate at the end of the year, and we will stay here at this higher level. And now the market is trusting him. As you can see, there's just the expectancy for one lower interest rate here in December with a 37% probability, and then lower interest rates during 2024. So yeah, it will be interesting. So this next Federal Reserve meeting in 12 days will be important for the market, especially because we had these big changes here in expectancies in the previous days. So now let's move to the market and see what it is doing. I had an open long position. I opened the day before yesterday and I closed pre-market here right at the near the high point. I closed at 14,559 points, and the high point you can see here was 14,564 points, just 5 points higher than my level. And where did I get this level from? So if we look on the daily time frame, you can clearly see the previous high point. from May 30th, and there you see the high point was 14,570 points. So I decided to take this as my profit target, just 10 points below. So 14,560 is 10 points below, and there I said, okay, let's take 14,559, so I can be sure that I will get an out. And yeah, that was the perfect level here for today pre-market. So I'm out before non-farm payrolls. So whatever the numbers are, I won't care about because I have no position right now. You can see the profit from today here, and I can also show you the closed position here. Here it is. I had some M&Q futures. This was a long position. I opened at around 14,300 and 350 points. And I closed it here, as you can see, 11:18 a.m. my time, which is middle of the night in Eastern time. But here you can see the profit, and I had one more NQ future, which had a contract size of 20 times Nasdaq, and I made about the same profit with this Nasdaq future. So now here I am just watching the chart and waiting for the numbers. And what can we expect from the numbers? Like always, everything can happen. We already know that the forecast is pretty low and we will probably get higher than expected numbers. And normally higher than expected numbers mean higher inflation. And this is not what the market wants to see, because then we will probably get one more rate hike, what the market is not expecting at the moment. Therefore, this should cause a drop in the market. But as well, we can see a drop and then see a further push up. So it can change pretty fast. Therefore, we have to be prepared for everything. You see the market is still bullish here since we left this sideways trading phase here around the 13,380. So this was our sideways trading. We went a long time sideways, then we went above, and then you see here this big breakout because a lot of shorties had to cover their short positions here. Then we had this come back here to the 9 EMA level, and there I closed my shorts. I still had open shorts here, and I closed my shorts here when we came back to the 9 EMA because this wasn't looking good anymore for my short position. And it was a good thing to be out of the shorts because then we pushed further to the upside. And I reopened long positions. As soon as I saw that the market wants to rise again, I opened some more long positions here, but closed early at the 14,000 level because I thought it could be a cap here for this round number. But then we had this huge push in just one day, and within 3 trading days we went to the 14,500 level. So I missed all this rally here. Unfortunately, I made some smaller profits here with a long position, and then yesterday, or the day before yesterday, when we had this comeback here to the 9 EMA level, I reopened a long position and closed now pre-market. So let's see if we can push above. We still have higher levels to get. If I can show you on Finwiz, then you will see, if we go back in time, you will see the previous high points on a weekly time frame. So we are above the August highs from 2022, but the next target here would be the April high from 2022, which is sitting around 15,200 points here. So there's still 600, 700 points to go here for Nasdaq future. If we will hit these high points, this would be the next bigger resistance. If we are looking at ES future for S&P 500, then the target is sitting a little bit lower because there we haven't reached the August highs from 2022. And a lot of people are watching ES or S&P 500. Therefore, 4,320 is the important level. So this is a little bit nearer, just 70 points from the current level. So now let's get back to the numbers because we will see the outcome in just a couple of seconds. Let's go to a 1 minute time frame and also then see what Euro US dollar is doing. Just 10 seconds left. Let's see what we can get here. 2 seconds. And boom, market is dropping. So like expected, the number is, it's a lot higher. Look at this, 339K. This is a lot higher than expected. So yeah, this number was far too low as forecast. And yeah, we see still high participation rate, 62.6%. And unemployment rate is higher, 3.7%. So this is interesting. expected rate is 3.5 and we got a 3.7%. But yeah, this is more important in my opinion. Average hourly earnings and average hourly earnings year over year were just in line with the expectation. So this is a good sign for the market. But yeah, a high number and but higher than expected unemployment rate. So this will be interesting. And there's the recovery right away. Market is turning. The first direction is often the false one. So let's see if we are just going sideways today. It's pretty rare, but it happens. And normally we can see big moves on the non-farm payroll day. So let's have a look at the Euro-US dollar as well, because there we will probably see more movements. We already had this big shift to the downside here in the previous trading days. We'll just delete all these lines and then you can see from the 111 back to here the low point. This was a 4% move, and then yesterday we had a big green candle here. So let's see the moves from today in maybe a 1 minute time frame. So the same movement to the downside, a strong labor market and maybe higher than expected interest rate levels mean a stronger US dollar or a weaker euro, and this is why Euro US dollar is dropping right now here. So normally we should see the same direction as with the stock market. Pulling back a little bit, but really this is not a big move for non-farm payrolls. Really interesting. Average hourly earnings is less. No, it's, yeah, you are right, sorry. It's a little bit lower, 0.3 instead of 0.4%. So this is why the number is red, but the yearly number is 4.3, so this is like expected. And yeah, this is just a monthly number, therefore I don't know why this is a 3-star event and this is 2-star. I would always look at the yearly number because it has more significance if you are looking over 1 year instead of just 1 month. But yes, it's a little bit lower than expected, but it could also be 0.34% and it would be rounded to 0.3%. So it has not a lot to say here. But when the yearly number is in line with the expectation, this is a good sign. So we can still see a shift to higher levels on US Open, but we often see the first move false direction. So maybe we'll go 15, 20 or 30 minutes into one direction and then turn heavier on market open. So maybe going to lower levels and then see dip buyers at market open. Just wait for clear signs to found the bottom, and then if you want, so you can trade to the long side. So this could be a nice level here. 14,500 is around level, and we had the pre-market lows here 1 hour before the European opening, and just 10 minutes after the European opening we had these low points here right below 14,500. So therefore this is an important area, especially because we closed there yesterday. As you can see, right before the closing we went to lower levels, came back there and found a resistance and closed at this level. So therefore this is an important level. If we go back there, we should probably find some support there. And market is already turning. Maybe it's happening faster than I thought. So pre-market high 14,564 points. This should act as a resistance. So when will I short Nasdaq? It's the question. I first want to see some signs on higher time frames, for example like 15 minutes and 1 hour time frame. So especially here yesterday, this was really good to see. The market was strong, so it was pushing to the upside, and you see the 9 EMA was never tested. So we already were above the parabolic until here, just 45 minutes before the closing, we tested the 9 EMA and the parabolic went to the upside. So this was a nice entry if you wanted to short here after the closing of this 15-minute candle. And then you see the sell-off, and then we went back above the 20 EMA. So this was a good sign for a reversal here. And then you can go to lower time frames and look for a potential reversal. So here you already see the first green candle, and yeah, then we went back to the closing level. So therefore this could be a nice short. with just 15 minutes or 20 minutes into a position, and until you see the first green candle, then you are out. So just these two moving averages and the parabolic together, also on the 5-minute time frame, you would have seen it here closing below the parabolic on a 5-minute time frame and on a 15-minute time frame. So the parabolic is changing to the upside and indicating a downtrend or a change of direction. And this can be interesting as a day trader. And if you want to day trade, I would watch for this during the normal trading session, not pre-market, because there we see often shifts like this, yeah, from up to down, because we are just in a sideways trading phase right now. So I would wait for a clear break to higher levels or to lower levels. This is about a 70 points area here. But more important as a swing trader will be higher time frames, for example 4-hour time frame and daily chart. So there we still see we are above the 20 EMA level. So yes, we traded a little bit lower here. We were trading sideways here. We found the bottom here at the 14,250 level. We tested it 3-4 times, and then there was this big green candle. So yeah, this is a good sign that we are holding the levels and pushing back to higher levels. So yeah, it is a resistance now, the previous high points, but we can push above with the news. And you see the parabolic is positive here on a 4-hour time frame, and as well you see ADX is still positive, and the red line is above 30. So we have a strong uptrend here on a 4-hour time frame, and the same on a daily. Here you can see we didn't even touch the 9 EMA in the previous trading days. You see the parabolic is positive below the chart. The same for ADX, pretty strong above 30. So yeah, it's bullish right now, and I wouldn't short into this just to try to catch the high point, the probable high point. Rather wait for a clear sign. Like here, you could have seen it on a daily time frame with this candle. You see the doji and this big wick on the upside. So this is a clear sign that the sellers want to take over. It just happened for 1.5 days, but this can be an interesting entry if you want to short here and or to find a possible high point. Yeah, of course you will have to have your stop loss in place or your exit. And if we are going to lower levels like we did here on May 31st, you can still place your stop loss onto your entry point and you won't lose money. So I didn't short it here. I just waited for a nice entry point to take it long again, because into an uptrend I don't want to short here. I'm just waiting for a recovery here, and waiting for the chart to find a support at the 9 EMA or even at the 20 EMA like we had here. So let's wait what the market wants to do and move on with some other commodities. For example, crude oil is really interesting because there will be an OPEC conference on Sunday, and the OPEC told some newspapers that they are not allowed anymore to report live from their session, and they want traders to short crude oil. So probably they want to lower the output, but as we can see, the crude oil price went below this uptrend here and crushed a little bit to the downside. There is a recovery yesterday and today, so probably we will retest the breakout level here around $72.50, $73 maybe, and then I would say maybe there will be more sell-off, because normally we retest the previous low points, which was sitting around here. So you see previous low points, and we didn't reach these low points. So there is more downside potential, and I believe that there is a stronger resistance here between $73 and $74, the previous high points. Therefore, I wouldn't go long into this, even if the OPEC is warning short traders here in crude oil. We had the bad numbers from Chinese economy. There's a slowdown and therefore less demand for crude oil products. Therefore, be cautious if you want to trade crude oil with the OPEC conference on Sunday in Vienna. Then let's have a look on natural gas. Natural gas is really interesting. I took an early long position, a little bit too early, unfortunately, here at the $2.30 level. We had this nice candle in the midday, so we went to higher levels up to $2.41, and it looked good for a reversal here because we already retested previous low points the day before, But then on the closing, we went lower and closed here at $2.26. So I was a little bit in the red, but it was just one contract, just the first position. And I said, I will stay patient. I will wait. Even if we go to lower levels, back to the 208 or $2 area, I can take on more long positions. Because I believe that there's more chance to the upside than there's risk to the downside, especially if we are coming into the summer. And when there's a heat wave, then probably more natural gas will be needed in the US. And especially during the hurricane time, there can be shutdowns of platforms, and therefore we can have big and fast squeezes to the upside. So be prepared for this. The natural gas market is not the widowmaker market for nothing. So therefore be cautious if you trade natural gas. Just trade with small positions like I did with just one contract here. I'm being patient and waiting for a bottom to be found to take on more onto my long position. My target would be here around the $2.50. Yeah, maybe we will go back to the 280, but I want to close some out here at 250, which would be a potential of about 15% to the upside from the current level. Yeah, but waiting for a clear sign of a reversal and then taking on more long positions here. What other commodities are interesting? Orange juice is interesting because there we had the breakout, a really rally to the upside with new highs at near the 300 cents level, 295 cents, and then a retest of the breakout level at the previous highs. So still sitting above, still bullish, and even more bullish is if we look at the commitment of traders. So if we go here to Finwith and are looking on orange juice, so there we can see what are the farmers doing. So all the commercial traders, and there we see on a weekly time frame, the commercials are lowering their short positions. So normally they are contrarians. If the price is high, the farmers want to sell their orange juice contracts for a high price because they know it's a good price for the oranges. So they want to sell. They are contrarians. And normally if they have a pretty high short position, then this is a good sign that the orange juice prices are at their high points and will soon drop. It's not a timing indicator, but it's a good first sign. But what can we see here? The prices are rising and the commercials, the green line, are lowering their short positions. So they are not believing that we have seen the high point in orange juice prices. And this is not a good sign for a reversal. So I would be really cautious in shorting orange juice right now and rather wait for a clear sign that the commercials are taking on more short positions and that we see final high points here in orange juice prices, because you see we are at the highest point we have ever seen for frozen orange juice concentrate here. Yeah, but this doesn't mean that this is the high point. It can still go to higher levels, and you see when the commercials are lowering their short positions, this is not a good sign, because normally you see when the price is rising, commercials are entering short positions, and then when they have a pretty high short position, then we probably see a lower orange juice price then. So be cautious and have a close look on the commercial side here. And yeah, let's move on with two interesting stocks from AI sector. Let's begin with Nvidia. Nvidia is a strong stock. After the earnings, we went up more than 30%. Had high points here at $419.38. I shorted a little bit too early into it at 370, then 390, and I catched almost the high point. $480 was my last short entry, so I had 3 entries, but my median price was a little bit below the current price level, so I'm in the red, but it's a small position for me with Nvidia. I'm directly short into Nvidia stock, but at the same time I had a long position in Nasdaq future. So yeah, it's not too bad to have this short position still in place, because if the market one day wants to turn to the downside, what I'm still expecting, because in June I believe we will probably see the shift in the market, and then I want to be short into this high flyer rally with one of these AI stocks here like Nvidia. It is risky, I know, but it's just a small position for my portfolio. Tesla, also interesting. I didn't short into the stock because it would be too risky here with these big movements. You see 12% in just 4 trading days. Yeah, but we are near the previous high points now, almost above today. So yeah, let's see if the stock can find a little bit of resistance near the previous high point there. I bought a 150 strike long put expiring in July. Let's see if we can get to lower levels and see higher implied volatility here. The blue line is the expected volatility during the next 30 days. So if the implied volatility is rising and the stock is dropping, I can make money with my 150 strike long put, and if not, I can just lose the option premium and not more, even if the stock is doubling in price. I just joined. Pascal, what's your view on Nasdaq now? We were always talking about Nasdaq, so just go back in time and then you can rewatch it. Non-farm payrolls and unemployment just released. Yes, we already talked about this when I started the live stream. Just go back and then you can rewatch it. Okay, what else do we have interesting here? Gold. Let's talk about gold, because gold is also interesting with this strong US dollar. Let's see our gold prices here. So gold was going sideways, had this smaller breakout to the upside when we had bad news from the banking sector, but then we break below the previous lows here, and then there was a smaller sell-off. Then, like always, with 70-80% chance to see a retest of the breakout level, and we had this retest 2 times here, and then there was further sell-off. Now we went back to the 1930 level, and now we went back to the breakout level. So it will be interesting if we can push back above into this sideways trading zone. But the higher probability is that we will be rejected here from this level and see lower levels in the next trading days and weeks, because with the strong US dollar, normally we see weakness in gold prices. Wix, the volatility is pretty low. Look at this, almost no fear in the market. There was a big drop yesterday. Look here, this was a drop of 12% to levels of 15.6 at the closing, and we went even lower today, pre-market 15.2. So as long as the market is rising to higher levels, there will be less fear. So it is pretty cheap right now to buy some calls on Wix and to be secured if something is happening and we will see more fear in the market. So I'm buying some cheap calls here with a back spread or ratio back spread. I call it fire extinguisher. So I'm able to extinguish a fire if if it happens, and if it happens, it always happens pretty fast. So you see, within 3 trading days, we went here from low points of 15.5 to high points of 21, and this is a 36% move. It doesn't look a lot because we had high points here above the 30 level. I'm not expecting Wix to go right away back to the 30 level, but we can see levels back at 20, and yeah, this is a pretty harsh move here of 30%, and this can happen pretty quick, as you have seen. Therefore, be prepared for this. And yeah, it's just a small amount of my portfolio, but it can be a good protection. Therefore, I call it fire extinguisher. Just selling some at the money calls and buying some further out of the money calls. And this is a zero cost trade, so I'm not spending a lot of money on these trades, and I will only lose if we will stay within a range. But if the volatility is further dropping, I can make money, and if we see a fast rise in the next 2 or 3 weeks, then I can also be protected here for more fear in the market. Okay, if you have a stock, just let me know in the comments and I can bring this up. So we had an interesting stock here, which is Palantir. Palantir was rising since the earnings. Look at this, we had the earnings, a big drop in implied volatility and a big move to the upside. This was a 30% move to the upside, and since then we had a 90% move to the upside. Just crazy, from this breakout level here at 750, and now we are sitting at $14.70. Crazy move for a stock, and now you see how fast the implied volatility went back to the high points from pre-earnings. Yeah, because a lot of people are now buying puts to be protected if the stock is turning back to lower levels. So yeah, whatever you do, you will get a high premium by selling options on Palantir, even if it's a low price stock, which was just $14.17. PayPal, yeah, this is an interesting one. I also have it on my watch list. It's a weak stock, but it's interesting to see. I want to get some shares into my long-term portfolio, but I'm waiting for a clear bottom to be found because I believe that we can even see $45 levels. So there's more room to the downside here, in my opinion. Maybe we'll retest here the previous high point sitting at the $65. So there's still some more room here to retest this level. But if I go on a higher time frame like a monthly chart, so just deleting all these lines here, then here you see this is a pretty low level. The last time we were at these low levels was 2017, so it's pretty cheap to buy into PayPal right now. Yes, they have some problems, of course, but I still believe that PayPal is a good company and they are making money. So it will be interesting even into a recession when you can get it at for lower prices. But you see here's almost no point technically where the stock will find a support. So therefore we have to wait for a clear bottom to be found. And here you see the previous high points are sitting at around $45, and therefore I will wait for these levels maybe to be triggered. And then this is a 25% move to the downside. There is more room. I wouldn't short it right now, but I would wait to collect the stock here at around $45 for my long-term portfolio, because implied volatility is pretty low compared to the past for PayPal. Okay, hope you got some nice insights, and let's see if there is an important date next week where I can live stream again. So I'm planning to do less live streams just for the important news, but bringing up some interesting videos for you. So I will do German videos but with English subtitles, so you can still watch it and understand what I'm saying, but it will be easier for me to do it in German and to provide English subtitles for you. But being live for the important news here, like today, non-farm payrolls. Next week is nothing really important. Services PMI, ISM non-manufacturing on Monday, but the rest of the week is pretty non-interesting. Yes, like every week, initial jobless claims, but yeah, nothing special here for this week. But probably in 2 weeks we will have some more interesting news. So let's have a look here to see CPI on June 13th. So this one will be important, and of course I will try to live stream here 1 hour before the market is open, because there we will see big movements again. Okay, thank you for watching. If you haven't done so far, please subscribe to my channel, and yeah, give me a like for this stream if you had some nice insights. I wish you happy trading and a good start into your weekend. We see us next time. Goodbye.